90% of millionaires became so through owning real estate. This is a famous quote from Andrew Carnegie that is almost 100 years old. In today's video, I will share why real estate investing has several advantages that can reliably create better results than being a stock picker. Hi there. My name is Koukun and I'm a realtor and I run a real estate team here in the Niagara region. If at any point in this video you need help navigating the real estate market here, hit pause and reach out to me using the contact information in the description below. I'd be happy to schedule a quick 15-minute call to discuss how I can help you in your real estate journey. Now, I've been a huge fan of Warren Buffett and Charlie Munger for a long time, even before I started investing in real estate. And recently I have made some investments in stocks, but I'm definitely no expert in that area. Here are just some of my observations. It is easy to buy high and sell low with stock investing, and it's very rare in real estate. The two cardinal sins of investing are buying high and selling low. Of course, when you are doing it, rarely do you know that you're buying high at the top or selling at the bottom. Emotions play a big role, both in the fear of missing out at the top and the fear that things are just going to get worse at the bottom. In this regard, however, investing in real estate has the advantage of high transaction costs and difficulty to transact. This may sound strange because the fact that it is not easy or cheap to buy and especially sell real estate causes most investors to do the cheaper and easier option, which is to just hold. And usually a sale or purchase is done after careful consideration and discussion with a third party like a realtor or other investors. One of the investors I've been studying recently is Howard Marks. I find his memos very insightful, and one of the points he makes is the following. If you buy high, there will be some regret. You will kick yourself for a while, but there is this underlying trend. The economy will move up over time, and so will the market. He continues, I really believe that getting out at the bottom and failing to get back in is the cardinal sin in investing. If you sell at the bottom and fail to get back in, you will miss the recovery and the long-term trend. We really have to take advantage of the long-term trend. That is the main job of an investor. While the fear of missing out during good times definitely still causes real estate investors to buy at the top, in my work as an investment-focused realtor, I've seen it very rarely that real estate investors decide to sell their properties at a loss, especially if it's an income producing where the income can cover all or some of the expenses. In contrast, it seems that stock investors have the benefit of being able to buy and sell their holdings in an instant without almost any cost. This, however, puts them at the mercy of their emotions, and it is very natural to want to buy when things are going up and sell when things are going down, even when you are aware of this psychological tendency. The evidence of this is seen in the following. Between 2002 and 2021, the S&P 500 went up on average 9.5% per year. However, if you were a buyer of individual stocks, it would have been hard not to buy more during the years leading up to 2007 when the market peaked, and following that not to sell during the 2008 financial crisis when stocks collapsed. As a result, the average investor during this entire time period got a return of just 3.6%. Now, part of this may have been reduced by fees that they paid into mutual funds, but investor optimism and pessimism also play a big role in buying in the highs and selling in the lows. The second advantage that real estate investors have is what I call patient leverage. Now, according to Howard Marks, leverage adds no value. If you're someone who borrows money to invest and in the good years gets double the market return and in the bad years loses double, you've simply increased the range of possible outcomes. That being said, I believe that the structure of a mortgage is much more favorable than, for example, margin loans that some investors use to buy stocks. The reason for this is that a bank is rarely going to call you to pay back your mortgage because house prices have gone down. This, however, is exactly what happens when you invest in stocks with borrowed money, causing you to sell at the worst possible times in order to meet the bank's requirements, making you a forced seller. The third difference is that real estate can be an inefficient market and it is impossible to diversify. While it is commonly accepted that the stock market is generally efficient most of the time, meaning that stocks are fairly priced, though it can sometimes swing between extremes of euphoria and pessimism, and with individual companies, the risk of unexpected outcomes happening are relatively high, so the common mantra is that you should be diversified. Though some like Warren Buffett and Charlie Munger disagree with this idea. When it comes to real estate investing, specifically in buying and selling directly owned rental properties, diversification is pretty much impossible. Instead, most investors choose to specialize in one area, one strategy, and build a team of professionals to support them in that process. This can be valuable to find opportunities within their area of expertise that may be otherwise missed by other investors, or maybe it's too small or too big for some of their competitors to consider. And usually, in order to purchase a rental property, you will need to put a fairly large amount of your money into this single investment, causing you to really think it through and be more careful. The result, in my opinion, is that the investment decisions are typically made with more sound judgment. It can still sometimes lead to bad results due to chance, but rarely is it because of a spur-of-the-moment emotional decision. As a result, I believe that real estate investors have an advantage because buying and selling is difficult, leverage comes with better terms, and they seek an edge and bet big when they find it. All that being said, if you are a stock investor, it is completely within your control to take the advantages that real estate investors have by incorporating it into your investing process. Make a contract with yourself prior to purchasing or selling stock and write out your reasoning for it. Don't use margin to borrow and invest, and look for opportunities where you feel you have an edge, where the overall sentiment is either too pessimistic or optimistic. And when you find a great opportunity, make a long-term investment and only sell if you were wrong in your reasoning, not because the market goes up or down. Let me know in the comments below how you feel about real estate investing versus stock investing. Do you agree with this video? And if not, let me know what you disagree with. And if you're interested in real estate investing in the Niagara region, feel free to book a 15-minute call with me in the link below. If you like this video, give us a thumbs up, and if you haven't already, subscribe for more investing content. All the best.